So obviously before 10, every Thursday religiously at 10:30 we have NG has a news item. It's a report, and this is something fundamental. You never know if it's going to be a good news or a bad news. So fundamentals are fundamentals are basically the big boy moves. These are guys that are going to do their thing in the market, regardless of the algorithm, regardless of whether your stows are at the bottom or your moving averages are lined up for a trend or your MACD is about to cross. All those kinds of patterns are what we consider technical patterns. So you have to, the first rule of thumb is separating what's a technical pattern and what's a fundamental move. Okay, and fundamental moves happen based on time. So that every day you check those times for reports. Make sure that you're out of your trade 5 minutes before every report. Do not be tempted to do a trade 5 minutes before your report. So here you can see between 9 o'clock and 9:30 and 10 o'clock, this was all a technical move. Can you see that our stows over here, our stows all scrunched together, coming down to bottom. Our MACD was on the top, ready to cross. Our 13 moving average was ready to cross. And this is what we call our perfect trade, which is actually our reversal strategy. Okay, so if you want to understand that also a little bit more, you can go in the videos and watch the videos that talk about retracement versus reversal, that explain the reversal strategy. And what we have done is added a couple of ingredients by using the MACD and the stows. Now, so we're talking about technical versus fundamental for the moment. So over here you can see, here's 10:30, and we have this huge wick, a huge bar. So you can see where the price went all the way from 705 all the way up to the R4 and all the way back down to the R2, I think it was, and S2, sorry, all the way down to the S2. So that is a huge whipsaw, huge price movement in the market. And you can see that it'll follow very nicely, following the momentum of the move. It was a bad report today. So you want to make note that you never want to get in a trade between 10:25 and 10:30. Very, very important, especially during the summer bulges. Now, the most important thing I want to talk about today is what can you do on a consistent basis. How can you modify your strategy using the rules that we covered last week during the summer doldrums to be more profitable? And sometimes you're only going to be able to go for 2 or 3 ticks. Even though you're going to see the price action move 20 ticks later, sometimes, that's after the fact, because sometimes it's only going to move 2 ticks exactly and then go in the opposite direction. So because what's going to happen in the summer doldrums is it's going to be very hard to recognize what's a 20 tick move and what's a 2 tick move. I suggest that you just go in for 2 ticks. And if you're used to doing 5 trades, I suggest you do 2 trades. If you're used to trading with 5 contracts, I suggest you trade with 2 contracts. I highly recommend that you have your risk, cut it in half, so that this summer you're not throwing away all your profits that you made in the last quarter. Okay, so just bear with me. I'm going to cover a couple of things in just a second. So let's first talk about. Actually, let me do this. I'll come back to all this other stuff in just a minute. Okay, let's talk about the 2 basic strategies first. Okay, well, actually, there's 3. There's 3 strategies. There's our trend trade, our counter trend trade, and our reversal trade, which is called the perfect trade, right? And there's various things that you can look at to help spot these. So we can use the Segredo, we can use different time frames, we can use different indicators. So the first thing we want to look at let me just see what's going on here. Oh, we're moving into a fist there. So well, I'm going to use this example because I think this is a very, very good example here. The first thing we want to look at when we're spotting the trend versus the counter trend is we always want to locate the moving averages. And we always refer to the 13 and 20 crossing each other. That tells you the direction of the market, whether it's bullish or bearish. So we use the 13 EMA, the green line, the green moving average, crossing the black moving average, the 20 SMA, as our direction for bullish or bearish. And you never want to trade against those crosses. So right away, that should tell you which direction of that you're looking to trade. Now, if the 13 is above the SMA, the 20 SMA, obviously I'm looking to go long. Now, the more moving averages I have back in the direction, the better the move's likely to be. Last night was the first time I heard about the perfect trade. Is there info on it in the course? Yes, there is in the self-paced course. Like I said, perfect trade is really just a reversal. It's basically when the 13 and 20 cross. But I'll come to that in just a second. We're going to elaborate a little further. What's the difference? Is this the Melanie basic chart? Yes, this is. And I do suggest you, if you're new with us and you're just getting started, I do suggest that you load the Mel basic chart. Don't go with too many indicators and learn the basic trend trade, the basic counter trend trade, and the basic reversal trade. Now you will need to add an indicator which is called the HMA color change. So this extra line that I have here, the green line following the black line, sorry, the green line that changes green and red back and forth, that's called the HMA color change. It's the whole moving average. It's like the regular moving averages, except it's calculated differently. So it follows, I call it a shorter trend line, shorter trend line. It follows the linear regressions more than the moving averages. So it's a little faster than the regular moving averages. Remember, with trading, you want to have a balance between fast indicators and slow indicators. So in terms of trend lines, we like to use the LUNREG 4, LUNREG 9, and you don't have to use all of these things. You can take some of these things off. And we do like to use the HMA color change as our short-term trend line. But the slow trend lines, we use the moving averages, MACD, and the 3 stows all combined very nicely. And that helps us to see when the market's really going bullish and bearish so that you can time your entries. So let's just cover the bullish and bearish concept first, and then we'll talk about timing using the short-term trend lines. This is very important, so pay attention to this. Because I'm going to show you what indicators you're going to use in the summer doldrums, especially to time these entries. And sometimes you're only going to be able to go for 2 or 3 ticks. I'll tell you that right now. So the first concept I want everybody to get right now is the concept of bullish and bearish. Remember, we can use things like obviously the 13 crossing the 20, the stows, and of course the MACD. The MACD crossing above or below also helps you to think of bullish and bearish. But the MACD can also figure out, as you can see here, it looks like it was crossed. The stows look like they were going to come down. Stows like to meander a long time on overbought or oversold. So you can't always guarantee that it's going to take on a bullish or a bearish direction just because it's angled to it or it's all set up. It can take a while. So you need a little bit more to confirm that. But the first thing we want to look for is if the MACD is above the 0 line, which we call the center line. Center or 0 line, they're both the same, mean the same thing, right? So the fact that the MACD is above the center line and the stows are at the top, the stows are at the 80 line, we're always looking for the 80 or the 20 line, that tells us that we're really looking for an opportunity to go short. If the MACD is below the 0 line, then we're looking for an opportunity to go long. We know that the market's about to reverse. So here the MACD and the stows are below the 0 line, and this is below the 80 line, so we're really looking for something to go long. Now this is in the early hours of the morning, so there's not a whole lot of trading going on there. So the first thing we look for bullish and bearish is the position of the MACD and the stows. Are they above or are they below the positions? Then we also look at the moving average in relation to the other moving averages. So obviously, when you're looking to go for a trend trade, we're looking to trade with majority of the moving averages. And remember, for our trend trade rules, we're always looking to start with the touching candle, bouncing off the 13. So every single one of these bounces off the green moving average is what we consider a trend stability, a probability for entry. Now you can trade from the bounce to the point of resistance, which in this case would be a pivot or a fractal. As you can see here, where the asterisks are is where the fractals are. Okay. Now so you have two choices. You can either get in at the 13 or at the cross here and go long and get out at a resistance point, being a pivot or a fractal, or you can get in at the top and go short on the counter trend. So that's what we talk about when we talk about trend versus counter trend. Now, there's one thing that you want to define in terms of timing is if you are going to go with the trend. I always tell people there's always two really good moves, on on a trend. Let me put it this way. I want you to think of every time the 13 crosses the 20, and when it crosses again, so from cross to cross, let's call that a mini trend inside of a big trend. So what we're looking for is to trade, you can always start at the point across, and you always look for two really good moves. Sometimes you get a third, sometimes it peters out. Now on the counter trend between the mini trends, you usually also get two really good moves. You'll get one in the middle and one at the end. The one that's closest to the beginning of the mini trend is a counter trend I recommend that you stay out of. You never want to do the counter trend at the beginning of a direction. Okay, you never want a counter trend here at the beginning of a direction. And I always tell people, be careful. Always look when you see that the price is changing direction. Locate where the 13 and 20 crosses. And you never want to do that counter trend. You rather want to wait till the second big move has happened, and then your chances of doing your counter trend are a lot better. So the squares are your counter trend. Now in the world of counter trend, you're going to hear me say two different terminologies. The first one is called the retracement. The second one is called the reversal or perfect trade. So what we use to help spot the difference between a retracement and a reversal is a couple of things. The first thing we look for is the 13 ready to cross the 20? So we're looking at this 13 moving average in relation to the 20. The next thing we look for is the MACD looking like it's ready to come down? In this case, it was ready to come down. And the third thing we look for is the stows at the top. Are they scrunched together and look like they're ready to come down? When all three are lined up nicely and they cross and they're ready to come down, along with the 13 crossing that 20, then you know you're heading for a reversal. But that's not always easy to see. That's not always easy to see. So I'm going to elaborate for you further on how you can improve things in terms of this timing. So let's just clarify really quickly. The three strategies are the trend trade, bouncing off the 13. You want to look for move number 1 and move number 2. The counter trend trade, which is the later part of the trend. And you want to either do a retracement, which means that you get out. It's a short scalping trade. You want to get out by the 13, go for 2 or 3 ticks, or reversal, where you can get in at some point here and ride it down and follow the new direction, looking at the MACD and the stows. So those are really the 3 strategies we're going to focus on. Now, how can we improve the timing? So let's take a look at this. I have to show you a real-time example. Let me see. We just missed it. Okay, let me take it back to this move here because this is a good example. Let's go back to 12:10. See if we can see this better. So here we have a 1-minute chart and a 3-minute chart. Now, what I strongly suggest when you're looking to enter a trade, whether it be a trend trade or a counter trend trade, let's look at these two examples for a second. What you're really looking for is the relationship of the HMA color change. Now I'm going to change this chart for a second because I have a template where I've taken a bunch of stuff off to make it really stand out for you. And I call this my naked HMA chart. Easier for you. So if we look at these two examples, particularly, let me just demonstrate this and then I'll show you this real time, how this will execute. Here is a trend trade and here is a counter trend trade. The circle and the square per the 3-minute chart. Now, what you have to understand, I'll really make this stand out a little better for you. Is that not every trend trade or counter trend trade is going to work very nicely. Is my 3-minute HMA on the 14? Yes, the HMA is always the default setting. We only use 14, guys. We don't use anything else for the HMA. So whatever the default is, that's the one you use. But why am I going to be showing you this example? Because not every trend trade and counter trend trade is going to work very nicely. The first thing you want to look for is the least amount of barriers in the way. Now remember last week we talked about pivots, right? We talked about the concrete floor versus the wooden floor. So obviously, as you can see here, we have a concrete floor, which is the gray pivot, and the other colors are wooden floor. So the fact that we have now, in terms of support and resistance, now we're going to be looking for clues for high probability. So when it comes to pivots, things to consider, right? You always want to look for the PP, the S3, and the S4 are stronger than the other pivots and barriers and require the HMA to cross it, right? Or the EMA to cross it. Here you can see, based on our 1-minute chart, that the 13 is indeed above the S3, so it's above that. So now we can see that this is a nice support point to do a trend trade. Additionally, what else you notice on your 3-minute chart is, remember what I said last week? I said that the Turk and the brown fractals are to be used for your trend trade. So as you can see here, we have an asterisk, which was a circle with a dot. You always get the circle with a dot. Then when the position confirms, it turns into an asterisk. So what the asterisk says, look at the color. It says we're now confirmed the low point, we're going up to the green fractal. So this brown fractal is what we're using to bounce as a support point. So now we have two support points to trade off. So as you can see here, we've got the S3 pivot as a concrete floor, so we know this should be a good bounce. And we have the brown fractal as a strong support point with the confirmation of the confirmed low. That's what those asterisks mean. We hit the low, we hit the high, it's time to change direction. If we look at our 1-minute chart, in addition to that, we see that the 13 the 13 EMA has crossed the 20, so we're now in a bullish direction of the trend, and our HMA is green. The fact that the HMA is green confirms that it's long. But most importantly, I want you to look at this. There's one extra thing that I want you to look for, guys. If you notice, every time the HMA color change, remember last week we talked about the HMA color change, look at the candle position in relation to the direction of the HMA and make 9 indicators before entering the direction. Ask yourself, am I north or south of the line? As you can see here, the HMA now has come to the price, right? And the price is now pushing through the HMA to go north of the line. Here you can see more closely on the 1 minute chart, the price is clearly above the HMA. We have come from below to the other side. So we look at our HMA color change here, you can see that the price is clearly above the other side. So this double setup is what I want you to look for when you're doing your summer doldrums trade. I want you to look for when the 3 minute chart especially is going to the top or the 3 minutes going below, and you see that you've either got a trend trade or a counter trend trade on the 1 minute chart following the basic rules. And you can see here we're as close to 13 as possible is where you'd like to enter. You can enter on any of these two candles, and you would ignore the wooden floors. Remember we covered that last week. You would ignore the brown pivot, the orange pivot, because this is the beginning of something. Every time the 13 and 20 cross, it's the beginning of a mini trend inside of a bigger trend. And think of it as it's the beginning of the 200-meter sprint. There's lots of 200-meter sprints throughout the day, and you need to think of every time that 13 EMA crosses that 20 SMA, it's the beginning of a 200-meter sprint. So you can ignore, especially if there's momentum, you can ignore the wooden pivots at those particular times. The only time you consider the wooden pivots, I call them, is when the 200-meter sprint is about to finish. I do not have the PP lines on your template. They should be there. Just reload the chart. It should be all part of the default. So now let's let me just show you these two examples because I'm going to show you these real time so you can see this. I'm going to show you how to use the Segredo to also improve this timing. Now what I suggest in doing, if you haven't made a lot of money already, during the summer doldrums you just jump in if you see the setup and you go for 2 or 3 ticks and you get out. I don't care if it goes for 20 ticks. Just go for 2 or 3 ticks and you just do this throughout the morning. You just look for the 3 minute chart going above and the HMA confirming, the 1 minute going above, and the same with below. Here you can see that the 3 minute chart is going below the HMA, and on the 1 chart we can see that there's not only is there nice divergence, but now we're using the resistance and support information in the opposite direction, because now we're looking at other things. What are we looking for? Looking at moving averages, looking at fractals, and pivot information, right? So the first thing we're going to notice on the 1 minute chart, what do we notice? What's the most important thing when you're looking for counter trend? What do you have in terms of resistance? We have the 200 SMA, right? The big red fat line that's standing out there. That should be the most important thing that you see. It's the strongest barrier in the market. That's where the battleground is for the bulls and the bears. So now that we've basically hit this, and we've got an asterisk to confirm the high. So there would have been a fractal here. So again, now we've got 2 resistance points, 2 barriers to bounce off of. This is really, really important when trading. You want to look for support and resistance information to improve the probability of your trades. So remember, the 200 SMA is the strongest barrier. You must never enter a candle on the 200 SMA unless you've confirmed that the 13 EMA is crossing it. So if we locate the 13, we can see it's very far, it's not about to cross. So there's no chance that the price is going to go through that 200 SMA. For us to confirm that we're going to go through the 200 SMA, the 30 would need to be a lot closer to that. And if you look at your 3-minute chart, you can see that it's confirming with the HMA coming down. Also notice that your 3-minute chart is also giving you a asterisk with showing down to the fractal. So between the fractal and the pivot and the moving average, you've now got 3 things to confirm that we're coming back down. I suggest you wait for the price action to be south of the border, south of your HMA, right? Point number 6. And then you enter and you go for 2 or 3 ticks. And if you're looking for your perfect trade, here you can see even when you got 2 stows, things are coming back down. Your MACD crossing, aligning with that. So you could always stay longer if you see that the MACD and the stows are confirming as well. Instead of going for just 3 ticks, you could always stay longer. But in the sub doldrums, I suggest just look for these setups and go for 3 ticks. Are there any questions about the trend versus the counter trend using the HMA? What do the numbers on the right axis of the MACD represent? That's just where the price is trading at. It's just every trend line has an average. It has a calculation to show you overbought and oversold. That's all it's really doing. It's just showing you when we've hit the top of things or when we've hit the bottom of things. Please show the first page of the rules again. Yes. So remember, what we're looking for here is we want to choose the moves that are going to guarantee our fill versus moves that are just going flat or turning against us. So we want to look for high probability versus maybe trades. And this is very, very important during the doldrums because you're going to get a lot of maybe stuff. A lot of maybe stuff. So we want to be able to avoid the maybe stuff, and we only want to look for high probability. So what we're doing is we're redefining the already existing strategies, and we're saying only when these ingredients show up are we going to take it. So what we're doing here based on last week's class is we're tying in additional basics of support resistance information to choose only the trend and counter trend moves, adding with the added support and resistance confirmations. This way, our probability factor is greatly increased to guarantee our fills. That's what we're looking for. So that's the purpose of this document, is basically to show you some basic rules to watch for in terms of support resistance. So the most important thing is you've got to know your pivots, how to trade with your pivots. And last week we talked about the concrete floors versus the wooden floors. So if you look at your pivots, if I take it all the way to the end here, you can see the labels. And we always trade pretty much between the S4 and the R4. R4 is the ceiling, S4 is the basement. And there's different colors. There's only 3 pivots that are really, really strong in terms of barriers. The market always stops on them. And one is the S4, the other one is the S. So I consider that a double floor. As you can see here, the market, even with all the news, came down, hit the S4, bounced, came down, hit the S4, and bounced. That's what a concrete floor means. It means that if the 13 moving average doesn't demonstrate that it's about to cross that resistance or support point, then there's no way that the price is going to go through it. That's what a concrete floor means. So it requires the 13 EMA to cross it in order to guarantee penetration. As you can see here we came up to the PP. 13 was too far away, stopped on a dime. Even with the news item, 13 was clearly too far, wasn't able to change the direction of the market. So only when the 13 EMA is actually going to cross that pivot will there be penetration. So here you can see the 13 EMA is crossing the pivot. Will there be penetration? Other than that, it will stop on a dime. So it's very important to know what support and resistance. And as you can see here, even though the price squeezed through, you might be tempted to go long here. Look at the 13. The 13 has not crossed this pivot. Let me do this so you can see it more clearly. 13 is too far away. Only look at this price action here. Here you will be very tempted. This is a maybe trade. Very tempted to go long. Your 13 is green. MACD is below the zero line. MACD looks like it's going to go up. Stows look like it coming up. Be very tempted to go long. If you don't know that this is a concrete barrier versus a wooden barrier and requires a 13 to cross it, this is how you get HFT'd out of the market. This is what's going to happen to you throughout the month of August. You're going to get into a move like this, and you're going to see that the price action is going to whipsaw on you and hit your stop. Then it's going to continue, and you're going to get very frustrated. Very frustrated. So we have to further define what's high probability and what's not, and we have to know the support and resistance basics. Okay? So you need to know the stuff. If we look at this, let's take a look at this particular move here at 11:20, and let's look at 11:20. What do you see with regards to my 3-minute chart? What do you notice? Let's see if you've been paying attention to what I just covered. What is the name of the PP indicator? Because I can't bring it up at all. Just reload the Mel Basic template. It's the PP indicator is probably, you probably can't see it. It's hiding behind the purple one. And all you do when you go to indicators is you go, the indicators are all built into in one indicator. It's called the SDPPNT7. That's the pivot indicator. So the answer to my question is, what do you guys notice? 3 stows are all together near the bottom, heading back up. No. My question was, okay, we're talking about strong barriers, right? We're talking about the concrete floor. And what I was referring to is, what can we look for to separate high probability versus maybe trades? That's what we're looking for in some doldrums. So when we're talking about this trade here, this is not a high probability trade. It is not a high probability trade per our support and resistance rules. Remember, our support and resistance rule says the PP, the S3, and the S4 are strong barriers, and the 13 EMA must cross it before penetration will hold true. So how can we avoid this fake out? Here you think you have a trend trade bouncing off the 13. What can we look for? Well, if you were just paying attention to what I was saying, stows are not a guarantee. Remember, stows are a lagging indicator, and stows are like catfish. They can swim at the bottom, or they could swim at the top for a long period of time before they change direction. So stows and MACD are not a guarantee for timing. They just kind of tell you we're likely to go in that direction, as long as you have your already existing most important confirmations. So what are the most important confirmations we're looking for? Well, one of the rules we talked about, along with the PP rule, we talked about, before you take a trade, always ask yourself, am I north or south of the HMA color change? Okay, and if you look at the 3-minute chart, What did I just demonstrate that you're going to be looking for? So all those people who said the candle is below the HMA, you get yourself a chocolate chip cookie. Well done. You were paying attention. That's what I just demonstrated. This is what's going to help you in the summer doldrums avoid these fake outs. You must include the 3-minute HMA confirmation. Now you can additionally include the 5-minute as well. But just to get started, I would say start with the 1 and the 3 at the very least. So if you see here, you don't have a double confirmation. Here we are above, but here we are below. So are we looking to go long yet? No, we're not ready. We're not ready to go long. So now, if we move a little forward, now at 11:30, are we looking to go long? Well, lo and behold, what do we see at 11:30? 13 EMA is crossing the resistance point, the concrete floor, and our 3-minute is crossing our HMA. This is what you're going to use to help you confirm maybe trades from fake outs. Yes, there's my first cookie. Good job. So you're paying attention. So are you guys tracking with me where I'm going with all of this? Okay. Once you understand, you should know these rules like the back of your hand. You shouldn't have to think about it. You shouldn't have to remind yourself about north of the border, south of the line with the HMA. It should be automatically imprinted in your brain. And I want you to do replay. I want you to pick out a rule and go on the replay and go, I'm only going to look at the HMA. HMA, HMA, HMA. Is the candle above? I go. Is the candle below? I go. And you practice that until you're blue in the face. Then you pick the next rule. I'm only going to focus on the pivots. I'm going to look at the S3. Are we crossing it? I'm going to look at the PP. Have we crossed it yet with the 13? I'm going to go. Until these rules are printed in your brain that you don't have to think about them. Because I don't have to think about them. I just type them out for you guys to memorize them. But I don't have to think about this stuff. I see it and it's autopilot for me. And that's how it should be for you. If you have to think about these things and look for them, you're not experienced enough to go live yet. You need to do more replay. So let's see how we can do this. Is there a copy of the rules? If you need a copy of these rules, please don't send an email to Shadow Sword. It drives them bonkers. Okay? If you need any stuff I cover in my class, you must send me directly an email. Send it to melaniesuntrades@gmail.com. I'll send out the email in your inbox before I close the class for today. So now, if you want to confirm, let's talk about this. Let me see here. Let's go to this 9 o'clock move. Let me elaborate one more example. So here obviously you can see the price action is going above the HMA, so the trend is established, and here the price action is going below the HMA, so now the counter trend plus reversal. Remember, what is a reversal or a perfect trade, we call it? Perfect trade and reversal are the same thing. So sometimes we call it a reversal, sometimes we call it the perfect trade. Where did perfect trade come from? I'll tell you why. Because Barbara by nature, as a trader, is a counter trender. Melanie by trader is a trend trader. Even though we're both experienced traders, and even though Barbara technically is the brains behind the operation, she's the one who developed the strategies, Barbara the educator and Barbara the trader are two different people. So she can code a trade, it doesn't mean she likes to necessarily do them. So you're going to find that you're going to favor one strategy more than the other. I always suggest you learn at least 2 strategies, so so that you have more possibilities. But you're going to do one more than the other, and it's based on whether you're a left brain thinker or a right brain thinker. Are you a technically inclined person, or are you more of a artist type person or a manager type person who have to always think of the bigger picture or the bigger problem solving? You'll be more in your right brain, and you'll tend to go more with the trend than the counter trend. But I don't want you to get caught up in too many details. So what is the perfect trade? Well, it's really the perfect time to do a counter trend. That's all Barbara is saying. It's the perfect time to do a counter trend. That's why it's called the perfect trade, okay? Because there are times when a counter trend really sucks, and it's going to whipsaw you because it's countering the trend, and you got in too late, or there wasn't enough traders to go in the new direction. So let me give you an example. Here's a good example. It's a trend that really sucks. If you got in here, you just got stopped out. That's not a good time to do the counter trend. Here's a counter trend that's really good. What's the difference between the square and the circle? Who can tell me? Both are counter trends. What's the difference? Does the entry have to be at the point of the HMA changing color on the 3-minute chart? Not necessarily. I'll come back to that question, Oscar. What's the difference between the square and the circle?
This is going in the wrong HMA way, but this
the EMA turned green. You mean the HMA color change? Yeah, that's one good thing. The HMA here is red. That's a clue. Here it's green.
also
MACD. Okay, so MACD is a huge clue here. Now, kind of could have crossed here. See, if we go back and we look at these 2 examples right side of the edge, these are the mistakes you're going to make when you first try to do these strategies, because you're not thinking with all the nuances. Okay. In the world of the trend trades and the counter trends, there are good ones and there are bad ones. And we have to establish which ones are the good and which are the bad. So here we have a counter trend that is technically a retracement, and the MACD, if you were thinking, anticipating or forecasting, which we do sometimes as traders, you would have anticipated probably that MACD is about to cross. Those are at the bottom. It hasn't ticked up yet. Can you see the STO 20 hasn't ticked up? So you want to look for that STO to come up. But you can see the 13 is flat. It looks like we hit, there's an asterisk confirmer. It looks like we're about to go back up. And you would think that only to get caught by the trend. Here's the trend. The trend's not over. That's the danger when you're trading into moving averages. When you're trading with the moving averages, chances are even if you get in here, let's say you're coming down the trend and it turned a little bit on you, it's not going to stop you out. Chances are it's going to continue and fill your order. So when you're trading with the moving averages, which is going with the trend, with majority of agreement in the market, you can still afford to ride things out. But when you're in the counter trend, you can't afford to do that. Because now it's going to establish a lower low, and now the counter trend is going to be lower than your entry price. And you're going to have to do things like doubling up, adding more contracts, add more leverage, and which add more risk, and all kinds of problems can happen. And sometimes it can go so low that it can never come back to that entry point. So that's how people wipe themselves out. So it's very important that you see the difference. So here you can see this is what Barbara calls a perfect trade, which is really a perfect counter trend opportunity, is what she's saying. She's a counter trend trader by nature. She doesn't like to take those. She's not going to mess with that. She's going to wait till she sees the MACDs cross. The stows look like they're actually, the stow 20 has in fact ticked up versus just staying flat. And she is looking for other things to help her out. What else do you notice in terms of our support and resistance that we were talking about? What else can you look for on the support and resistance clues? Between the square and the circle, what else do you look for? The S3. The S4. Good job, guys. You're paying attention. Can you see what the strong barriers? So here we have crossed below. So now what is this S3? Can you see that we cleared south of the border by 2 ticks? Remember the rule? That the pivots change their properties. Where's my 2-tick rule on my list? Here we go. The pivots change their properties when going long or short from the lowest or the highest part of a candle. If the price clears by 2 ticks, then it changes from support to resistance or resistance to support. All pivots change their properties. So here, if we cleared, which we did, on this candle and this candle, when we're coming down, we cleared below the S3 from the top of the candle, wick or body, by 2 ticks. Therefore, this pivot now is resistance. It's no longer support, it is now resistance. So going trading into it, it is now a concrete floor. This would be a big mistake. A wrong time to do a counter trend. But over here, you have an S4 strong barrier as your support. We never cleared south of from the top of the candle. We never cleared south from the top of the candle going short. Remember, going short has to clear from the top of the candle by 2 ticks. So the fact that we never cleared that border by 2 ticks means that this pivot is support. It's remained as a strong floor. So therefore, this is a good time to do a counter trend. Because now we have the fractal plus the pivot plus MACD and the stows are in alignment. So this is a perfect time to do a counter trend, which is all the perfect trade is. That's all it is. It's just the perfect time to do a counter trend. Now, there are opportunities where it's not going to involve the MACD and the stows, and you can do a counter trend. Those we call retracements, which is this one here. So please understand the difference. Here is a good time to do counter trend. Why? Because after most fundamental moves, you'll get a very good move when the dust settles. You get the big move, and then you get the good move when the dust settles. And those are your best times to do counter trends as well. But that's not going to involve the MACD or the stows. It doesn't mean you can't take the trade though. That is simply your basic retracement counter trend strategy. This over here is your reversal or perfect trade counter trend strategy. And this here is a nothing trade. It's something you should stay out of. So you need to know the difference between these three. Okay? This retracement, you simply follow the circle with a dot, the limit rate making a V, and the fact that we've gone above the HMA, and the fact that we have a strong support. You should always take counter trends of strong supports or resistance points. If you try to do a counter trend where there's no strong support into a strong resistance, you're in trouble. And at this point here, you've got the MACD and the stow adding to your alignment, which is now telling you that the trend has petered out. That's what that's saying. The MACDs and the stows involved in the new direction is now saying things have petered out on the previous direction. We are now ready to change from bearish to bullish. Does that make sense? Everybody clear on that? Is there anybody who's confused about the difference between a retracement and a reversal or perfect trade and when you should do them and when you shouldn't do them. Yes, and here you can also see in the retracements, the 13 is very, it's got a lot of divergence. It's not about to cross the 20. So you want to make sure that you have reached your 2-tick or 3-tick fill before you land on the 13. If there's a lot of divergence between the 13 and the 20 here, you want to be out. That's the rule of retracements. That's the golden rule of retracements. Make sure that you're out of your trade by the time you hit the 13 if it's clearly retracement. If it's a reversal, you can always go through it. Chances are it's going to continue. So now that you understand those concepts really clearly, we're going to trade them in just a second. Let me just clarify this 9 o'clock reversal here, because I think this is a very good example. And what are the things you can look for in terms of using the HMA rule, north of the border or south of the border? So here you can see this is clearly a perfect trade. It's the perfect time to do your counter trend, because what is a reversal trade? It's a marriage between a gap trade, a counter trend, and a trend. It's the development of the new trend in the new direction. You see, what we have to understand is we always clarify that the trend is with majority of the moving averages trading in the direction. See, this would not be technically a trend trade here. This is not a trend trade, I'm sure. Even though the 13 crossed, it's not a trend trade. It's actually just a counter trend, because it doesn't go with majority of the moving averages. There's still 3 other moving averages below. The real trend is trading with majority of the moving averages. So then how can we say, what's the difference between the circle here and this over here? Well, there's essentially 2 things here. Let's take a look at these 2 examples, because this is another thing we need to understand. There's 2 things you can look at here. You can see at the first example, we compare it just to our 3-minute chart, following our HMA rule. Here at 8:50, the price action did actually go below the HMA. So there was enough to do a nice little counter trend. You still would have made money, but you can't afford to get in late here. You really needed to get in here right at the top, ride it through the cross, and you're out. But now on this one over here, look at this nice one going below, but it continued forever. So you stand to make a lot more ticks on that reversal. So this reversal was short-lived. This reversal continued. Started off as a basic gap trade, retracement trade, continued, and then the other moving averages. Well, how can we spot those versus the one that's short-lived? Well, it's very simple. The more time frames you include in the mix, the more you start to see the trend changes occurring. If we look at our 5-minute chart, if you start to bring in the 5-minute chart and check in with that once in a while, you will then find out when things are really continuing versus temporary. And here, if I look at my 5-minute chart, let me just take this back a little bit here. Can you see the difference between our 9 o'clock move, our 8:50 to 9 o'clock move, is our 5 o'clock, and our 10 o'clock? What's the difference? So now if you add 5 minutes into the equation, even though the 3-minute gave us the south of the border rule, went below, it gave enough to get a very short-term strategy filled. So we would have, if we were just looking for the entry, took a few ticks, we got out, would have been successful. We looked for the entry, took a few ticks, we got out, and looked successful. But now, notice that our 5-minute never really went south of the border. Never really went. It managed to get on the bottom of this candle, but notice the HMA never changed color. Look at our MACDs are going through the center line. So things look very different according to the 5 minute. All this is simply is retracement. Now you can see on this scenario, things look very different. We have a left spread. We have the price is now going below the HMA, and you can see your SOs are all nicely scrunched at the top. So now we have the alignment with the MACD and the STOs. Everything is in alignment across 3 time frames. So the more time frames you add into the mix, the stronger the longevity of the new direction. More agreement, more continual trading in that direction. That's what the different time frames mean. They basically represent more agreement of traders going in that direction. If you're just looking at a 1 minute chart, you can't see the difference. But right side of the edge, you can't tell because the technical line looks the same at every candle. But if you now add in the 3 minute chart, you can see a little bit more. And if you add in a 5 minute chart, well, you can see the bigger trend even more. So it's very, very important that you learn this. And you can do the same with your Segredo charts. So you could use the higher time frames to trade bigger trends. Exactly. But at the same token, and that's what I would also do when doing trading in the summer doldrums, is I would wait for the 5 minutes and down to get involved before you really get interested in a move, in a direction. So when you see, oh, the 5 minute, oh, it's too close to support here. Look, the 13 is green, that is support. MACD, the trend is still up. So you're looking for something long. You're looking for the HMA to go long, looking to catch these bounces based on which direction. So we're using the 5 minute to confirm the direction, but we're still using the 1 minute to get in nice and early. Because you'll see you'll catch the bottom of the bar versus the top of the bar to improve your timing even more by using the combination of the two. You see that this is green, you know the direction based on the 5 minute chart, and you see the exact candle you want to get in on the 1 minute chart. That's the idea here. Can I show the Segredo for the 1045 to 1055 trade? 1045 to 1055. Sure. Well, let me before I get onto the Segredo, let me just, because we're gonna trade this together here for a second. So what we're gonna do, because I want to talk about fractals. You know, again, everything we're tying together is using these rules to help the more obvious things stand out, and we're using the basics of support resistance to tie in with our strategies. But let's do this. I'm going to do this 850 here. Let me just do this for a second. You guys are all following along, right? I haven't lost anybody. Everybody's keeping track with what I'm saying. This is very important that you connect the dots here. Excellent. Now, when you use Segredo, what's really nice about this is if you watch the same thing happen with the Segredo. In fact, there's probably one happening in real time right now. Let me just see here. That's what I was waiting for. Good. Look here, we're running to the S4. We're going to see this real here. Is our 3-minute chart. Okay. See our 3-minute chart is now below the HMA. Do you see how we've cleared majority of our members? So we are in a trend short. This is a trend rate short. But now look at our 3-minute and 1-minute Segredo. Can you see that our HMA has changed color in the 1, 2, 3 zone? But what I look for is when my 3-minute is on the blue 102 or the yellow 102. If I see that my 3-minute is giving me a blue with a red number coming short, along with my 1 minute, will probably be on a blue or a red, 102. I will be able to, I don't know if you can actually see this here. There's the blue. Can you see the blue came in here? The blue 102 on the Segredo oscillator part.
No, where?
When you start to see that come in and you see your HMAs the right color, now that is what I'm looking for to jump in and catch my trend. Now, it doesn't always go to the moon. I mean, obviously, this is over here we have a yellow 102, and it was short-lived, which is why I said sometimes you're only going to get 2 or 3 ticks, and sometimes you're going to get 20 ticks. What you need to pay attention to is if you add the 5-minute chart in the mix as well, you're going to be able to separate what likely to be a short-term 2 to 3 tick move and what's likely to be a long-term move. Because you're going to get HFTs like this in the market that are just going to suddenly, out of nowhere, take it 20 ticks, out of nowhere. And that's what's going to happen in the summertime. If we look at this move here, let's look at this over a little bit, at 1318, right? You can see here we're crossing the 200, 1318, and if we look at compare it to our 5-minute chart at 1318, you can see that our oscillator was blue. Our oscillator is blue. It's telling us we're coming down. We're not really in an uptrend. Chances are we're coming down. And if we look at our 5-minute chart here, well, things are kind of flat. It could go any direction. Right, we've got a green candle, but things are kind of flat. And if you want to even add one more thing into the mix, what do you see if you add your 50-minute chart? Sorry, but so many things up here. Let's see if we can try to spread this out a little bit to make it a little bit more clearer for you. There's our 3-minute. There's our 5-minute. We now add our 15-minute chart in. What does our 15-minute chart say? Which is why I always say you got to have at least a 1, 5, and 15 or a 1, 3, and 15. You can trade with, you can replace the 3 with the 5 if you like. But what do you see with the 15-minute chart at 1318? What is this move here? It's a retracement. It's a retracement. Look at your MACD. Look at your stows. Look at your moving averages. They're all on top. Look at your 13. It's still resistance. So clearly, things are going to end at the resistance point. So now you would be paying attention to that. If you look just at Grado, you can see that the oscillator is mostly showing red in the zone. It's mostly red, had a little bit of an HMA change color here, but the numbers are red. It's not green on green, which is what you need. And the alternators need to be yellow to confirm the green on green. So the probability of this going higher at 1318, it's going to be something short-lived. You can still trade a 3-minute and a 1-minute setup and go for 2 or 3 ticks. No more. If you're just looking for those changes. So if I was just looking for the HMA rule of above below, and here you can see that I've got a nice little trend set up here. We crossed. I'm just looking for the basic rule of above and below. I can do that all day long on my 1-minute and my 3-minute chart, just going for 2 or 3 ticks through the summer doldrum. But now if I want to go for more, I need to add in the bigger picture. So here I'll be waiting to see when we're going to go short, looking at my 15-minute to confirm the overall trend direction, which is short, and I just wait for this to show up. Wait for the price to go below, wait for this to show up, wait for my Segredo to give me a 1 or 2, and my HMAs are matching. You can see here the 5-minute is also matching. And now the 50-minute is matching, and now we have clearly a nice trend. And notice, what are we doing now? We're doing a retracement trade. Are we ready to do a reversal yet? No, this is not a reversal. Notice that the 3-minute is not involved. So let's do this really quickly. This is a very good example here. This is a very good example here. I'm going to show you this. When I trained, I used the 1, 3, and 15-minute charts, and they work perfectly. Excellent. Yeah, if you want a copy of my rules, then you just send me an email. You must send me an email after class. So let's take a look at this. And now the 50-minute is going green. So if we're doing a nice little retracement trade here, there we just got filled. Okay, 50-minute is going green. Notice that my 3-minute is now above the HMA. So the HMA has come to the price. My 3-minute is above the HMA. So in that sense, we're doing a retracement. Now, I'm not going to continue trading long. Why? We hit a resistance point. We have the turquoise fractal there. We have the 13. We've got the circle with the dot. Can you see the circle with the dot? There's the circle with the dot coming in, saying we could have a confirmed high. So I'm not going to continue trading long here. In fact, I got in a little bit late. I got lucky on that spike. Really, I should have entered on this candle. So in terms of strategies, this is clear retracement. Look at the divergence between the 13 and 20. Now we're coming back down. So this is not a reversal trade. Look at my stows at the bottom. My stows are flat, hasn't ticked up yet. Even though the MACD looks like it's going to cross eventually, it's still miles away from the red. Miles away. But most importantly, if I'm using the Segredo, what do I see? Well, we're on an 8. And 8 means we could go lower. It really needs to be a yellow bar. Needs to come in there on the 3-minute Segredo here. I need to see a yellow bar before I consider that we're going to continue reversing. All I simply did was trade the 1-minute yellow, number 1, number 2, number 3. That is what retracement is per the Segredo on the 1-minute chart. The yellows and the blues on the 1-minute Segredo chart are your retracement trades. The reversal, you need to see the 3-minute come into the mix. The 3-minute is not confirming those changes. You don't see the yellow or the blue, then you really don't have a reversal. And even if it does come in, it could still be short-lived. It could only be a 3-ticker until you see the 5-minute come into the mix. Now, a 5-minute is starting to go green, but it's still below that HMA. HMA is just now coming to it, coming through the price. So notice how the red candle's coming in here in the 3-minute chart. And this is another thing that I want to talk about that you're going to experience in the summer doldrums. One of the things you're going to experience is what we call testing support or resistance. Do you see here on this particular candle, it was green, now it's going to go red. There's a strong possibility that it's going to come down and test the HMA. You want to watch for that. HMA is now support. Can you see that the HMA, the price is above this HMA for the 3-minute chart? So the HMA is actually now support. So in the world of support and resistance, we are looking at this HMA now supporting the direction. So you will see that the price will push through and it will come back down and it will stop there. Watch for that. See how I'm not considering that we're going to jump into a massive trend short just yet, because what I'm watching for is I'm watching for whether this how low is it going to come? And once it comes down and tests the support, sometimes it'll come all the way and then turn around and go long. And you will notice this on all time frames. Every time you're faced with a counter trend, watch. You're going to see it squeeze through. Notice that the 3-minute Segredo is just coming in green here. The bottom's not yellow yet, but it is starting to go green. So we may have the start of a reversal here, start of our perfect trade that comes in, but it could still just be, like I said, a 3-ticker. Because my 5-minute chart hasn't really crossed the HMA. So what's going to happen is that it's going to come back down and test that support. And you're looking for another chance to get in when that does. When it comes back down, then it goes long again, comes back down and tests that support. And you're going to see this on all time. You'll notice when the 50-minute, look here, here's a classic example of it at 12 o'clock. Do you see that the price action goes up, closes the gap, comes back down, tests the support of the HMA, it still remains north of the border, and then continues higher. So you're going to see a second opportunity to trade. You get in on the gap trade, let it come back down, and you get in again because it's basically this, you're treating this as support. The HMA is now a support point. Same with a resistance point. You can see here, comes down, goes back up and tests the resistance point, and it continues lower. And if you look for these across all time frames, they're going to happen at different timings. Your 1, your 3, and your 5, and your 15. You're going to be able to jump in and steal an extra 3 ticks just based on that bounce. So if you know to look for it, and I wanted to highlight that today as part of your support and resistance information. I don't think I added that in here. Yeah. I like to wait until the price travels across the time close to touch the HMA. Exactly. When I trend trade, I use the answer that question. So is that clear on that particular point? Then you see here, let's follow this counter trend here and let's see how this develops. Notice that it's holding to the concrete floor, which is the S4 pivot. So knowing that you have a counter trend here is really, really important. Now, our 3-minute has now, the HMA has changed green. Okay, HMA has changed green. The 5-minute has pushed up. But things could still come back down because we haven't really tested that support point. It could still come back down. Can you see that? There it comes. There it comes. Notice that the Segredo never really changed to the yellow. Can you see this is the 3-minute Segredo? Even though the HMA is there, it's a 3-ticker, but the Segredo oscillator on the 3-minute chart never changed to the yellow. So there's still too much red. So you'll notice it's coming down to test that support point. Then we'll have another opportunity, maybe going to the turquoise fractal or the 50 moving average. So what we're going to be watching for here, see, notice that the 5-minute chart gave us the asterisks, and all this time, what we're doing here is we're trading the gap trade, the counter trend. This is still a counter trend. It's the start of a reversal. Notice that we're counter trending off the red fractal per 5-minute chart. There's your asterisk. So I always tell people, try to use your fractal information of your higher time frames, especially your 3 and your 5-minute chart. They will give you those confirmed lows. And then you know that the counter trend is really ready to go as well. You will see the circle with the dot come in, right? Or your 3 and your 5-minute chart. There's your circle with the dot came in off your red fractal, and they're always coming on the outer or the inner fractal. There's your asterisk of your 3-minute chart. So by using the same support and resistance rule that we covered last week, what did we say? You do Both the green and the red, you do gap trade strategy. That's what you use the green and the red for. You're looking for the circle of the dot, turn to the asterisk, time to do your gap trade, your counter trend. And off the turtle of the brown, you do your trend trade. Very important, support and resistance. Then it helps you to see that things are really ready to do supposed to do. So notice that the 5 minutes now has actually come down and touched that HMA. So might we be ready to continue higher? 15-minute chart is candle is still green, which is a good thing. What is it, the 3-minute chart? I'm going to put a trade on for you here, just on the simulator, just to show you. See if we can get some more out of this. Notice that the 3-minute chart is now yellow on the Segredo. And our 1-minute chart is giving us another 1 or a 2. Okay, and our 5 minutes giving us a nice tail here. I mean, it's not to say that we won't have any risk here. It could still come down because we never really tested that support level. So it can always come down. If it doesn't really hit that support level on the 3-minute chart, we can always still come back down. Okay, but I'm counting the fact that this is still green, that things are going to hold true. As long as that 15 is still green, and we could still continue a little higher. Are there any questions so far? Any questions about this?
Clear. Like you used to say, Dale, clear as mud. We've been reset.
No.
No, so our 5-minute candle is red, our 3-minute is red, so watch it, it'll still come back down. No questions so far. You guys can still hear me, right? Excellent. Is this being recorded? No. If you want to record things, you have to record them on your computer because the files are too big for me to send over the internet, so we don't record things. You guys have to download your own softwares and record them yourselves. Okay, and then you can delete them after. So using the Segredo timing along with support and resistance information, you're going to improve your chances of getting your targets filled. Now let's take a look at this 3-minute chart. I'm going to put it back to a regular template so that you guys can see the full picture of what we're looking for and why we're running into some resistance problems. Okay, so notice that we haven't quite closed the gap yet. We are hitting up against the turquoise fractal. And look, we're still going to come down and test that support. We haven't quite, so this is the problem with counter trends. You can expect this. Counter trends dilly-dally. Notice that they take a lot longer to get you filled than a trend, which is why I prefer to trade in the trend. The only time I ever do my counter trend is I try to this part and then I'm done with it. Try to do the reversal, early part of the reversal, and I'm done. You don't, doesn't, just because something crosses, it's not a guarantee. Notice we have the turquoise fractals here. These turquoise fractals, there's your confirmed high. Hit a resistance point. Showing you we've hit a resistance point. So that's the problem you're going to run into with counter trends. Look here, we're still coming down. We haven't really hit that HMA and tested that support yet. So as long as you haven't tested that support, be very careful getting in late on counter trends. You want to either catch, please pay attention to this, what I'm telling you here. This is going to save you a lot of heartache. Okay. You want to either catch the beginning as bounces of support, or you want to wait for it to test that level and then continue. Because if the trend is really strong, if it's not over, this is actually a retracement and not a reversal, what could happen is it will not only come down and test that support, but it will continue the trend and cross that HMA, and the HMA will change back to red. Stair step. like let me find one that's short so you can like this. Okay? So notice when we started the gap, we came down to test the support, and we continue to come back short and change color. So you're going to have these kinds of problems on your counter trends. And notice that our 5 minute hasn't really turned yellow yet on the spreader. And notice that our 50 minute is on a number 4. So here's the rule of thumb. I'm going to further clarify your bullish and bearish scenario for you. Let's take a look at this 50-minute chart for a minute. And let's compare it with the Segredo for a minute. And here's a rule that you can safely apply, especially throughout the summer doldrums. When looking at your 15-minute chart, okay, notice there, look, we're coming back up. Looks like we're testing that support. Be very cautious. You never want to counter trend when the 50-minute is on a number 1 or a 2. Maybe jump in and steal 2 or 3 ticks and you want to be out. So never ever ride a long counter trend when the 50-minute is a number 1, number 2. I'll wait till the 50 minutes on a number 4 or a 5 before I even consider a true reversal, a long-term reversal. And if it's a long trend, I wait for a 7 or 8. Let me see here. Here. Can you see we hit an 8, 7 or 8 and starting in the new direction? Never ever ever trade against a 1 or a 2 on a 15-minute chart. Okay. Ideally, I like to wait for 4 or 5 or 7 or 8 to come in on the 15-minute chart. Let me show you earlier here. Let me see. Here's a good example for the number 8. Can you see here 7 or 8 has petered out? We got a little extra 1 or 2 here, and then what I'm really looking for is the 15 minute to give me a green 1 or 2. When the 15 minute gives me a green 1 or 2, I know that things are going higher. As long as the 15 minute is not confirming that 1 or 2, then we can always continue lower. So you never want to ride your counter trend against the 15-minute chart. If you look at your moving averages, they're all on top. Things could go much lower. We could plow right through that S4. Okay. The only saving grace we have is that the 15-minute candle is actually green. That's what's saving our bacon here. So we're making it by the skin of our chinny chin chin. There, we just made it. Only because our 3-minute came down and tested the support and then finally closed the gap. It wasn't quite ready to close the gap yet. Can you see that? Tested that support. So the timing of your entry is very, very important that you notice this on counter trend. On the trend, it's no big deal. Because on the trend, when you're going with the moving averages, as soon as it penetrates that HMA, it's going to just go like a freight train. But on the counter trend is where you're going to run into this timing issue. So you want to catch the early bounce with the circle with a dot, bouncing off your red fractal to support. Take your 3 ticks because that is actually just your retracement trade. And then if you want to know that the thing, wait for it to come down and test that support level. And as long as you have the confirmation, there's the yellow coming in on the 50-minute chart. We're at a 4 or 5. As long as you have that confirmation of as much yellow, there's the yellow 5-minute chart, there's the yellow 1 or 2 on the 3-minute chart, then you know that things are continuing to reverse. Okay, but we're still only at a number 4. We could continue lower to a number 8 because that 15-minute is still the driver. We're still going with that 15-minute moving average. So the 15-minute closed the gap. We could go up to the 50, maybe the 200, and then we could come back down again.
No, and you've got a one yellow here. No, please.
I don't know what she's got.
She's not making it clear, Mark. I'm sorry. Maybe
She's making,
she's
I don't understand.
making it so much harder than it
But
needs.
she can't do that much. I don't know what they can do because they
See,
need
here's a somebody asked, can you review a couple of trades that I did today? Yeah, I was applying that rule today in class, and you could see here's a classic example. Soon as the candle crosses above the HMA jumping, go for 2 ticks. I didn't know that it was going to take off. This is an HFT 740. You don't know that the price is going to come in and shoot up like that. There's your doji. At this point, I'm only taking my 3 ticks. Here I'm just applying the basic trend trade and counter trend rules. As soon as we're below the price, notice that I'm out by the time we hit the 13, so I don't get caught in a bounce. I'm taking my 3 ticks. So that's the rule I'm applying for the summer dojis. And what I'm using, these are two trades that I traded today, real money. Okay? In the euro. So you can apply this little market. But what I'm trading is I'm basically using the HMA. I'm following the basics of support and resistance, paying attention to all the rules at any given moment in time, whatever shows up. And I'm using my Segredo to see, okay, do I have the yellow yet on my 3-minute chart? Do I have the blue yet? Do I have enough agreement to tell me that things are petered out, especially for my counter trends? For the trends, it's really simple because the HMA is all going to look the same, and it's all going to be red or green, and you're just going to go for it. But it's the counter trends that are a little tricky. This is where you guys are going to get. Are there any questions so far? So let's do this. Let me see if I can do this.
I'm getting worse with her. I can't take it. She's too fast. Yeah, she's too fast. So you look for yellow here and
where is it pointing? I don't look for yellow.
Do one thing each time. She's not a good teacher. She's not a good teacher anymore. She starts out okay and then it goes crazy. No, it's the quantum. I think she doesn't know she's not. Maybe she can't be heard somewhere.
Let me just check something here. Would you give me the corrections how to get the basics of support and resistance? Just send me an email, guys, to melaniesuntrades@gmail.com. I will give you the email before I end off today. Okay, we have a little bit longer. But what I'd like to do is spend the last half an hour, basically. Let's do see if we can do some replay on the NE. So notice we're coming back down again. We're not going to cross that 50. Look at the asterisk, look at the green fractal. We're bouncing off the green fractal. Notice here, we're back on the trend. We've got the circle, the dot off the turquoise fractal. So the 3 minutes telling us we're back on the trend. Okay, because we crossed the 13 on the 1 minute chart, it's a gap trade. On the 3 minute chart, it's a trend trade. There's your turquoise fractal. There's your moving averages on top. Okay, once the 13 crosses below the 1 minute, we're back to a trend trade. Okay, we could come all the way down because the driver is really the 15-minute chart. So even though the 3 minute closed the gap, it's a retracement, not a reversal. It looks like a reversal on a 1 minute chart, but it's not a long-term trend. It's still a retracement according to your medium term and your high term, your long term. Your medium term is your 3 and your 5, and your long term is your 15, and your short term is your 1. So you may think the party's over on your 1, but it's actually not. It's just something temporary. It's retracement on your medium term and your long term. So it's very important that you have this view at all times. Always have a 1, 3, and 15, or 1, 5, and 15 if you like, and you can use the Segredo the same way to see how much yellow is coming in or how much blue, and where are those HMAs? Are they red? Are they green? Are they crossed? Want to keep a tab on that. So you need to know what's a 3 ticker and what's a 20 ticker. And definitely on the counter trend, I wouldn't go for more than 3 ticks. Definitely, definitely, so you don't get yourself into trouble in the whipsaw.
That's why we don't do usually.
So let me do this. I'm going to see if I can connect to the replay here. Just trying to find my control center for a minute. 1 second. Oh, there it is. Got so many things up. Just give me a second. What about the 1, 5, and 15 Segredo? You can use this, the 1, 5, and 15, or the 1, 3, and 15. Here's my 5-minute chart. Here's my 5-minute Segredo. So I just have all 4 to show you, but you don't need all 4 time frames. You can just have 3. You can trade very effectively just on 2. You can have just the 1 and the 3. This is plenty. As long as you're just going for 3 ticks, so you're clearly following things like counter trend versus trend. So if you want to go for more, make sure that you're trading with the majority of the moving averages. And then if you're going into the moving averages, make sure that you're only going for 3 ticks. So you can trade very nicely all day long, just applying that with the 1 and the 3. Okay? The 50-minute just helps you to see the bigger picture, how long things are going to go for, and what are they likely to do next.
No.
You make this look so easy. I complicate the hell out of this. Good. Oh, well, you see, here's the thing.
I'm fabulous.
The rules are basic. It's not rocket science. What's hard for people is being hypnotized by the market. Because, especially with candles, I find that candles are very emotional. You know, we need to see the color and all of that, but this is a good exercise I always tell people. Take your 1-minute chart and put your candles on high-low. You see the candle thing up here? Put it on high-low. So now you're just looking at the trend line information. You're looking at your short-term trend lines, your HMA with your Linreg, and your long-term trend lines, which are your moving averages, and your MACD and your STOs. So now you're looking for where are you north of the HMA, south? Do you have where's your next resistance point? And if you do that, and you just have your 3-minute chart, this sometimes helps you to also not get caught in the emotion of the market. But what I find the problem that I have is not teaching people the rules, the technical, because they're very basic. The rules are the rules once you learn them. What I find is hard for people is teaching them the discipline. Discipline is very hard at first to master because we get caught up in the emotion of the market and we become mesmerized and hypnotized by price and volume and the HMA. That's really the issue here. Once you become experienced enough, the key thing is establishing a focus. Don't try to chase everything. Don't even get upset about missing that 40 tick move. Don't care. You don't care. Remember my balanced trader class. You just care your short-term goal. Have some short-term goals and long-term goals. Your short-term goal is to double your account, because now you've drastically minimized your risk and fear factor. So set yourself goals. Short-term goals, long-term goals. Yes, you want to be profitable within 6 months. You want to make your, 100K by the end of the year, or your 200K. But first you want to double your account. So you just want to go for 200 bucks. And I was in the trade room every day, and I laughed because Barbara said she read out somebody's question, and I had a good giggle to myself. I was ready to bring out my wooden spoon. But the person typed in and said, I've been trading all morning and I've only made 250 bucks. In the middle of the summer doldrums, I mean, really. So, 250 bucks. So Barbara said, well, how many contracts are you trading? This person said, one. Well, let me ask you. You're investing 500 bucks. 500 bucks to trade one lot. And your return on investment is 250 bucks. You should be happy with that. In terms of risk and reward, how many businesses can you use your index finger, people? Invest $500, okay, and get a 50% return on investment with your index finger. We have to keep things real, people. Keep it real. You guys are getting carried away by the engineering of the markets and price. It's because there's too much opportunity. You guys are missing the boat because you're over-engineering it, or you're not keeping it the right perspective in terms of risk and reward. So 200 bucks a day is fantastic. With a one contract, you should be happy with that, especially in the summer doldrums. And all you need to do that is do that for 20 days, guys. 20 days, you've doubled your account. How many businesses do you get your money back within the first 20 days? So let's keep perspective on this. Yeah? The problem is that if we make it too easy for you to make money, that's the real problem. We've made it too easy. And you guys are just getting too carried away. You're not applying good money management and good risk management. Not applying discipline. So it's not the rules. It's not even the technicals that are the problem. It's really your discipline. John says, thank you for the reminders of the reality. Can you explain to us more specifically how strong they are in relation to the pivot? Sure. I feel like I'm in church. I'm ready to jump in a restaurant with an amen. Well, that's very good. With me, I'll tell you, you will get the wooden spoon, because half my job is showing you technicals and the rules. The other half is teaching you how to be a profitable trader. And that involves changing your viewpoint. I almost have to rewire your brain. Okay, so I've been wanting to do the last half an hour, so let's do this really quickly before we run out of time here. If you can manage 2 or 3 weeks during the summer doldrums, just think that you can manage in the fall and winter. Yes, and the key thing is your short-term goal should be just get through the summer doldrums. You shouldn't expect to make $1,000 a day on a one lot. Okay? Don't expect that. You're not going to get that. There's only so much price action. And even if you're trying to go for that, guys, you are over trading. There's only so much price action that you can realistically, from a probability factor, do in a day. Hang on. No, it's not going to do this. Shoot. How come I'm not trading in the euro? I am trading in the euro. I did trade. I just showed you my trades in the euro. I'm just showing you the NG today because for the agenda. You know, I try to, and also I don't like to do the same thing all the time. I like to show different markets so people can see that the strategies work in all markets. But I do trade the euro. I can't do the replay for at the moment because I have too much stuff going on at the moment, fortunately. So I have to do some replay in next week's class for you. And what I'll do is I'll do a couple, I'll show you one of every strategy. But let's take a look at this at the moment here. Let's take a look at what's happening here in the NG market along with the spreader, and let's see if we can apply the support and resistance rules, because what are we looking for essentially here? we're looking at, can you see that the 5-minute is now come down and testing that support that I was talking about? And it looks like the 5-minute HMA is about to change color to red. Notice that the spreader on the 5-minute here is giving us a red 1 or 2. But are we really looking to go short just yet? We're looking to jump into a trend rate. How many people would like to go short here? And if so, why would, if you're not looking to go short, why would you not go short here? Who can tell me? Who says yes and who says no? And if you say no, why? I want to know why. Excellent. Excellent. So all those who said the S4 has not crossed the S4, you get yourself a chocolate chip cookie. So even though everything looks red, we got a number 1 here. Notice now that the 3-minute spreader is still showing us a yellow at the bottom. That's what the oscillator is doing for you on the 3-minute chart. It's actually protecting you, saying we're still in a yellow. Actually, my thing has hung up. Yeah, I've got too much running, so this is actually not real. Hold on. So, per our support and resistance rules, remember those little rules? What rule are we obeying on the list? The stronger barriers, the S3, S4, and the PP. This is, and you must wait for the 13 EMA to cross it. So even though things look red, and they might even go through, you can't grab everything. You have to have boundaries to trading if you want consistency. And you have to set those boundaries. You can't trace every red and every green just because it looks good or there's some ticks there to grab. You can't grab everything. You have to set yourself boundaries because you can't distinguish whether it's really going to go through or not. It's a probability. Notice that our 15-minute is actually yellow at the bottom here. Now, if our 15-minute said red at the bottom, I might think, yeah, this trend is going to continue. But this could all change, and this is what the summer doldrums is all about. It could all change in a flash. So you can't go just on red and green stuff that looks pretty good. That's not good enough for you. Okay? You have to apply certain rules to trade within certain boundaries, and you're going to miss a certain amount of price action. That's just the reality here. But you're going to be more consistent. So to apply this rule, 13 has to cross it per the 1-minute chart. And look, remember the rule I always say? Look how far the 13 is in relation to the barrier. If it's too far, the probability of that bouncing is very, very high. Probability is very high. Okay. Now the price action is going through. I'm still not going to enter a trade because I don't have a setup. Look, now it's bounced on me. It just turned green. Okay. Also notice that our 1-minute chart is actually on a 7. We should be on a 7 or 8 by now. Okay. So now it's going green. Now it's going red again. It doesn't matter. Whatever your price action is, remember, you have to stick with certain boundaries to establish that consistency. Just because, okay, look, 47 down to 43. Now we're going a little low. Now it looks like 13 is coming closer to the S4, but it still hasn't crossed yet. This could all turn around. This could all turn and go back to green.
Yeah.
This is not a qualified entry point yet. Instead, rather wait for it to come through and then look for the counter trend opportunity. So this is not a good trade opportunity for you. So you have to learn to qualify and disqualify good and bad opportunities. So you don't care that you missed a few ticks there. Rather wait for the next move. We'll be looking for a counter trend opportunity. We'll be looking for things to go yellow on the Segredo. Excellent lesson. I needed that. Yes, and this is the problem we have in the summer doldrums, is that people get sucked into, you get hypnotized by the candle. Look how much emotion is in this candle. How many of you were tempted to jump in here? Be honest. Come on. How many of you were tempted to jump in on that circle? Yes, and somebody says, be careful at the close of the NG market. It doesn't follow the rules. Yeah, the NG ends off a lot earlier. Peters out closer to 3 o'clock. And I'll tell you, everybody should be out of the market by 3:30 at the latest. You should not be trading because the bond traders come in and there's no rules. There are no rules at the end of the day. It's each to his own. Yeah, a lot of people say totally tempted. You're chasing red and green stuff. And this is what the support and resistance is all about. You need to apply these rules and you need to know them until they're on autopilot. Okay, so now we've just cleared the S4. But notice this 13 hasn't really crossed it yet. Can you see? It does cross till it crosses. My famous rule. It doesn't cross till it crosses. Now on this candle, the 13 looks like it's crossing the S4. Not quite yet. We want to wait for the close. Testing candles on the north side of the HMA. So let's see where we are with a 15-minute chart here. 15-minute looks like we want to continue lower. 5 minutes just crossing. HMA just changed back to red. Okay, so but we're holding to that red fractal. Can you see the red fractal there? Let's talk a little bit about fractals. Notice that we've come down, and I always look for the outermost fractal to. If I see things are going lower, I always look for the outermost fractal as true support or true resistance. It's kind of like fib numbers. You will see a range of levels, and you look for a certain fib range to be the true range where you think things are likely to stop. Okay? Fractals are pretty much the same way. You'll get several fractals because you get several bounces. But at some point, if things continue, I'm always looking for that outermost fractal, and if there's nothing there, the price goes through it. I wait for the next circle with the dot to show up to give me the new fractal. Because remember, the circle with the dot's always going to say a new fractal's coming. And when the asterisk forms to confirm the low point, the fractal is drawn. So you're looking for the outermost fractal, especially here on the 1-minute chart, as your ultimate stopping point. Now, if you see that we've hit it, and let's look at something like a 5-minute chart. What do you notice on a 5-minute chart fractals? You see, well, we have 2 red fractals here. We have the outer one that we hit earlier, and now we're hitting the inner one. That's another clue that things could turn around. Things we could do a nice little gap trade here. Because when we start bouncing on the inner fractals, that's almost like saying we hit a higher low versus a lower low. Remember, when we hit a lower low, we tend to go lower. And this is covered in your section 5, higher highs and lower lows and all that. You need to know the difference between a higher high and a lower high and a lower low and a higher low. Here's a low point. There's your asterisk. We come to a lower low. Means the trend's not over yet. The only reason up here is because we hit concrete floor. That's the only reason. Look at the strong momentum, we're coming lower. But
now
now
we're
we're on
on
a
a higher
higher
low.
low.
Even
Even
though
though
the
the
wick
wick
here
here
is
is
giving
giving
us
us
a
a
low
low
point,
point,
the
the
fractal is
fractal's
holding
holding
as
as
a
a
higher
higher low,
low,
not a
not a lower
lower
low.
low.
So
So
things
things
could
could
turn
turn
around
around
here.
here.
And if you
And if you
notice
notice
that
that
the
the
1 minute
1 minute
chart,
chart,
we've
we've
hit
hit
the
the
outermost
outermost
fractal.
fractal.
There's
There's
our
our
asterisk.
asterisk.
Come in.
Come in.
Confirm
Confirm
the
the
low.
low.
Things
Things
are
are
turning
turning
around.
around.
And
And
look
look
how
how
sneaky
sneaky
they are.
they are.
Look at
Look at
that
that
13.
13.
I mean, talk about
Talk about
crossing.
crossing.
It's actually
It's
on
actually
the
on the
border.
border.
You still
You
can't
still
tell
can't
if it's
tell
going to
if it's going to
continue lower.
continue lower.
That's the
That's the
problem
problem
with
with
trading
trading
on
on
the
the
S4,
S4,
which
which
is
is
why
why
I
I
don't
don't
recommend
recommend it.
it. I
I
don't
don't
recommend
recommend
trading
trading
on
on
the
the
S4.
S4.
If you're going to be trading on the
S4,
S4,
you
you
must
must
really
really
make
make
sure
sure
that
that
we've
we've
crossed
crossed
it.
it.
In
In
fact,
fact,
wait
wait
for
for
two
two
candles
candles
to
to
have
cleared
cleared
it,
it, to go
the
lower, the
HMA to
HMA to
turn,
turn, everything to be clearly below it before you consider coming short. Never jump in here. There's only one direction on the S4, and that's up. Okay? So don't get hypnotized and sucked into this stuff. You want to be looking for the counter trend here. Looking for that yellow to come in on the Sagredo. I got faked out trading the S4 bounce on the crude oil yesterday. Well, crude oil is its own animal. When you get faked out on the S4, trading the bounce, you know what happens? I'd be careful on crude oil at the moment because they're doing some crazy stuff over there. I would prefer you do it in markets like NG, 6E, 6A, 6E, and gold. I prefer you do it on gold than crude oil. Okay, so crude oil is an animal, especially on the counter trend. Because what you have to remember about crude oil is even though the volatility is good enough for you to get executed quickly, the problem is where people don't realize is that it's actually a trendy market. Crude oil and gold are actually trendy markets. I'll show you that. Let me just show this example. And the reason you get baked out on the S4 is because the higher time frame trend is too strong. So here's crude oil. You can see, look here, we're coming up to the S4. You should only be looking to go long. See when they really cross the S4. Okay, there's a bounce off the S3. And when the 13 is ready to cross it, we go below the S3, then we go to the S4. There's crude oil. We bounce on the S4. You always want to catch the first bounce. After the first bounce, that's the one you're really interested in doing. After that, you want to really be cautious, and you want to watch for, now look, this is not the best time to trade crude oil, but you want to be careful. You want to watch for when that 13 crosses it and comes below. But what people don't realize, if I do this, look at crude oil. It's a trendy market. Okay, and what we suggest in trading crude oil is you don't want to you don't want to do trend trades because the timing of your entries is very, very tricky, and the size of the bars, there's a lot of volatility. So you're really only looking for the counter trend to get in and get out, but you can't buck the trend in crude oil. It's a trendy market. You can't buck the trend. So you better make sure that you understand retracement versus reversal, and you better make sure that you match up your 3-minute chart or your 5-minute chart with crude oil before you go bucking the trend. And that's what people don't realize. Same with gold. They forget, because we've trained people to do counter trend, gap trades in crude oil, because you get filled fast. You get sucked in by that volatility, but you don't realize you're bucking the trend, and it's a very trendy market. Same with gold. Gold is a very trendy market. You can see I was trading gold this morning. Gold is a very trendy market.
They're telling you that, like, they waited till the end. She's never finished.
Sorry about that. Gold's a very trendy market. But because the bars are so big and there's so much volatility, if you get in on the trend, you can suffer a lot of heat. So the chances are it's better to count trends, but make sure that you understand your retracement versus reversals. Oh, I need to update my crude oil. Yes, I'm sorry, I forgot about that. And see, I don't trade crude oil. I leave that market alone. If I'm going to trade a volatile market, I prefer gold to crude oil. I just don't even trade crude oil. Border likes crude oil, but I don't trade it. I've never traded it. Never liked that market. But each to his own. What times do you trade the 6A, 6E, and 6J open and close? So trading when their markets are most active. Well, I just trade when my schedule. If I'm up in the morning and I see something's happening, I'll go and trade it. So what I recommend is that you trade if you're up at 2, 3 in the morning, based on if you're in the right time zone, you can trade the currencies at that from 2:30 till about 5 o'clock in the morning. Then it peters out. Then you can come back. I usually come back from about 8 o'clock, 7:30, 8 o'clock, and I trade a little bit of pre-market 8 o'clock through to 11 o'clock, and then I'm done for the day. If you want to do afternoon session, you don't start trading until about 12:15. That's when the market gets active again. You'll find that most markets, they take their lunch between 11:15 and 12:15. You can see it here in the price action. You can see how things just peter out. You see how flat it goes between 11:15 and 12:15. See, 11:15 is usually the last big move, and then you see things just go sideways. And this is gold, which is a volatile market. It just goes sideways. There's nothing to trade during lunch. So if you look at all the markets, you'll see this, and then it starts to kick in from about 12:30. You can see their price starts to come in, and you want to be out of the markets by 3:30. Don't trade past 3:30. And in crude oil, things will start to peter out. So you will see this is true for most markets. The canine is barking. I know my dogs like to go have at it. Would you recommend adding fractals to the 3 and the 5 minute naked charts? Yeah, absolutely. Yeah, you can create whatever simple chart you want, and do that. Let's go back to this NG for a minute. I probably have to. I have to reload this. Sometimes your segredo, you have to just, especially if you've had it up for a long time, several hours. Sometimes you have to just reload it, okay? Because it eats up a lot of resource on your computer, and it just hangs up. Just refresh it, once in a while. Oh, so on NG here, you can see, even though we're starting to peter out now because it's coming to the end of the day, and this is not the best time to be trading NG. You can see that we never really, it doesn't cross till it crosses. We never really went south of that S4. So you can't forecast that it's going to go. And the only reason that it would really go is if the trend is strong enough, and the trend holds true. But you can see here, we have hit our low fractal per 15-minute chart. And when you've hit the red fractal, what does the red fractal say? When you hit the red fractal, you're ready to look for a gap trade. So red and green means gap trade time. So if we hit the red, that means we're going to gap trade long. So that's what we're really looking for, is the gap trade. There's a circle with a dot on the 15-minute chart. So you want to pay attention to those fractals on the higher time frames. If you've hit that level, chances are it's not going to go lower. But now if you haven't hit it, let's change this to crude oil. Yeah, let me do this. Just quickly updating my crude oil here for a second. So let's take a look at crude oil, because I think this will be a good example for you. Notice there's the green coming in, okay? Now, if we take crude oil back to where we first, where's the S4? Yeah, okay. Can you see, based on crude oil coming through the S4, the only time that it really just plows right through that S4 is if we haven't hit the fractal yet. See, the fractal was way down here, and we're at the beginning of a move. We're at the beginning, in the middle of a strong trend. That's what you're looking for to just, we're going to plow through that S4 or not. If we're not at the beginning of a strong move, this is the start of the middle of the party of a trend, per the 50-minute time frame. Okay, so the first bounce here was really because, we hit the S3 there, we hit some fractals. Then once we started the next move, you see the MACD, those were still coming down further. We hadn't hit the fractal yet. Only once we hit the fractal, then we're ready to do the gap trade. So you can see what the asterisks are. You want to look for those fractals to help you establish, per the 15-minute chart, have we hit the low point or not. And it can be the outer or the inner. And you'll know that things are really ready to change direction when you start to see them hit the inner fractals as opposed to the outer fractals. Here we hit the outer fractal, and now we're starting to hit the inner fractals. When you start to go inside versus continuing outside, once it penetrates a fractal, then you have to wait for the new fractal to form. But once you start hitting the inner fractal, then you know things are ready to change direction. That's another clue that you should look for. Let me see what the ES looks like for a second.
Go through the S4. If you start a trend.
Sometimes the price on is affected, sometimes it doesn't. That's why I always balance between short-term and long-term projections in terms of timing. Are you looking to scalp something per your lower time frame? Or are you looking to, then you can go with a short-term pre-ticker, right? Or you're looking to see where are we in the overall trend. Are we at the beginning? Are we at the middle? Or are we at the end of the party? That's what you should always ask yourself. So fractals, you always have to remember, fractals are dynamic. They're not fixed like a pivot. And price action changes, so that means fractals can change too on the very next bar. Okay, you mustn't see fractals as a fixed point. They're telling you, calculating real time as trades are coming in. So they say, this is what we're calculating for right now. But as soon as the next bar starts, we have to start calculating again. So you can't see fractals like pivots. They're not fixed. They're dynamic. They're always changing as the trades are being counted. So they can only show you based on the probability for the criteria for your strategy. Okay, you can't say, oh, we hit a fractal, therefore the market's going to stop. Treat them as fixed points. You can only say, I got a circle with a dot. Do I have divergence? Am I below the HMA? Can I do my gap trade? You can only add it as an ingredient to an existing criteria for a strategy. You can't say the market's going to stop because we hit the fractal. And say, I want to take this gap trade because the fractal's also telling me that we hit a high. Okay, so they're kind of like Fibonacci's. Your price can go through, especially on trends on the inner fractals. So you want to watch for that. So let me see if I can demonstrate a couple of examples for you. Good. That seemed to answer your question. Let me see here. Let me see if I can. How I can demonstrate. See, look, still going higher. Didn't. See, and this is why I say, though you must follow the rule, it doesn't cross till it crosses, and even then it could turn around. You cannot forecast the S4. It's the most dangerous place to trade. And I'll say one more thing. Never, ever, ever, don't just assume the market's going to go lower because you're at the S4. And don't ever counter trend on the R4, above the R4 as well. Because it doesn't always mean it's going to come down. Let me see if I can find an example for you. Okay, so on the you can see here we are at the R4, right? And we pretty much held to it. But when we go clear above the R4, there are days, I know we had one, I'm sure we had one. Where it just doesn't come down. So don't assume just because you hit the ceiling that things are going to come down. Be very careful trading above the R4. You must always, when you're below the R4, I mean above the R4 or below the S4, in terms of support and resistance, you must follow the rules for your higher time frames. You must basically check, are you hitting those fractals, or are there other support and resistance information you can rely on? Okay, here's one. See, here we went above the R4, and we waited for the next day before we come down. Don't assume just because you're at the R4 that things are going to come lower. Here we came back down, and we didn't make it through. Okay, the R4 held to resistance. There again, we went above the R4, went sideways. So don't assume that just because you're at the top that you're going to come back down. So be very careful bucking the trend here. Above the R4, below the S4, same applies for the S4. When you're below the S4, don't assume that it's going to go up. Okay, on this day it does. Sometimes the trend is so strong that it will just stay down forever. So we're running out of time here. I just kind of wanted to wrap it up here. And I will spend, I will do a class on fractals, because I know fractals is, when you first get into fractals, it can be a little complicated. And what I suggest you do when you first approach fractals, I'll give you a tip when going to do your replays. I suggest you focus on either gap trade or trend trade at first. Do one strategy at a time. You want to master both, but do one strategy at a time in a replay. And here's what you do. If you're just looking to practice the gap trades, guess what? You go on your indicator box and you take off the other fractals. So if you're looking to do gap trade, you only need the red and the green. So you go ahead and you remove the brown and the turquoise. Oops, I didn't apply that. You remove the brown and the turquoise fractal at first. So just learn to see the price with one set of fractals when you're first learning fractals. And follow the principle that you're just looking to see when it hits gives me my high and I'm ready to do my gap trade or reversal. Perfect time to do your counter trend. So here you go, look, now it's simple because now you've only got one line to deal with. Okay, we got the circle with a dot, we hit the red fractal, I'm above the HMA, I've got enough spread before I hit resistance, time to do my gap trade. And you just practice that. That's all you need to practice. The same with the green fractal. Hit the green fractal. Oh, I'm not going to do this gap trade because I'm too close to my 13. So you need to have the Limerick 4, the circle with the dot, and you need to have divergence before you hit the barrier. Okay? Again, following your support and your resistance principles.
Because I had a Schwanson standing and she
You did this fractal here. You do this one because you've got enough spread there. You've got the pivot plus fractal, time to go. So that's how we approach fractals. Just do the green and red one to show you your counter trend, because your trend you're doing off the 13 anyway. So you don't really need the Turk and the brown necessarily. So you're just doing the trend off the moving average and you're doing the counter trend and you're using the fractal as an extra dynamic pivot to show you that things are going to turn around. And you can even do the same with the higher time frame. So for those people who get confused by fractals, remember when you're confused by something, you have to simplify, undercut it. That's what I always tell people. Cut, simplify until it starts to make sense. So if your charts are complicated, you take some things off until now this chart starts to make sense. Can you see? We go up, we cross. So when the 13 and 20 cross, we're in a bullish trend. We hit the fractal, we get the asterisks, we now do a counter trend. So now it's time to counter trend. Then the 13 and 20 cross. Now we're in a bearish trend. We continue lower till we hit the red fractal. When the circle is up with the red fractal shows up, now it's time to do the counter trend. We do a retracement till we hit the 13. We come back down till we hit the next fractal or the next pivot. So you're either doing your trend or your counter trend at the end of the day. And sometimes on counter trends you do retracement, and sometimes you do reversals or perfect trades as we call them. That's really it, guys. That's all there is to it. Retracement, end off at the 13, it's a scalping move, or we're waiting here for our lovely reversal, which hasn't happened yet. But here's a reversal. That's it. But at the end of the day, you're still using your fractals. So try that. It makes things a little simpler for you. Eastern time, yes. That's yes. We always talk about Eastern time, guys. We don't care whether you're Pacific or you're Central or whatever time zone you're on. Whenever we do anything related to the market, we always talk about Eastern time. So guys, have to go. Have fun. Remember, be cautious. Do few trades. Stick to your rules, right? And if you want these rules for me to send them to you, just simply go to Melanie Sun Trade. Oops. I'm sending it to you right now at gmail.com. And it's S-O-N, not sunny sun, okay? It's like the Chinese sun, even though I'm not Chinese. It's S-O-N. So it's melaniesuntrades@gmail.com. Shoot me an email and I'll send you the rules and practice them on the replay. And remember, focus on a set ingredient and focus on a set strategy and then move on to the next one until it's